Otto Waser in Zurich. He is partner and chief investment officer at RNA Research and Asset Management. Otto, how would you describe the last 3 months?
The last 3 months were awful. A perfect storm. Everything went wrong. The sovereign debt crisis intensified in Europe. A relatively big slowdown. Bad policy responses from policymakers across the Atlantic here in Europe. So no wonder really that markets did very badly on the stock side, and everything that was a safe asset was very well searched after by investors.
And when I'm speaking to you in 3 months from now, how will you be describing the fourth quarter?
We think that most of the bad news is priced now, and so we really have to see how things evolve from here. We think that the economy is still in a moderate downturn. It's unusual times. The sovereign debt crisis is not resolved, so there is still sort of a sense of caution at our end, and I think in the market. On the other hand, I think also the European equity market sell-off is just exaggerated, and I think there will be quite a closing of the gap of the underperformance of European stock markets relative to the US stock markets. You look at every sector in Europe is down much more, 5–10% more down than in the US, and I think that's not justified.
So where are you going to be putting your money when it comes to European equity markets so that you can take advantage of that gap that you expect to close?
Given the sell-off that we've seen in financials, particularly in insurance companies, and certainly in industrial stocks, we put our money into the cyclical sectors of the markets. The defensive sectors haven't done that badly, and we don't see that much upside in that sectors. So we have to bite the bullet and buy some cyclicals, particularly industrials, a little bit of technology.
When we look specifically at the different countries in Europe, we know that Spain and Italy are in a bit of trouble. We know all about Greece. How do you feel about these countries? I mean, are you staying out of Spain and Italy altogether?
Depends, really. I mean, if you're looking at a good exporting company like Inditex from Spain, that should not be affected at all by the sovereign debt woes that we also have in Spain. If you look at Spanish banks, don't touch them because they have a problem on the liability side. Very big funding risk going forward. They have to refinance a lot of bonds in the next 6 months. They have still write-offs to do. They have a housing bubble that is not cleaned up to deal with. We stay clean of Italian financials, certainly. As we've said, good exporting companies in these countries should be okay.
You talked about Spanish banks there. Stay away from them. Presumably you're talking about Santander. This is a company that you guys hold stock in. It's got a capital markets day today, so we're going to hear a bit more from management there.
Well, we actually don't recommend, and we don't hold any stock in Santander. We think really it's a place you shouldn't be in. Spanish banks, as we've said. We have still the housing bubble not fully cleaned up, and Spanish banks have an overhang from the sovereign debt. If we have to do something in banks that were oversold, we'd rather go to France, where we don't have the same sovereign debt issues. Santander made an investor day yesterday, and they have made some reasonably positive comments where they want to be in 3 years. Yet we still think there is caution advised because the Spanish book is simply not cleaned up as we would like to see it.
All right, so you said French banks. That's interesting. I stand corrected. You don't own Santander stocks. Why would you say French banks? Because they're heavily exposed to the debt crisis.
They are absolutely. As we said, I mean, if we have to do something at the edge of the banking system, we'd rather do French banks. Our favorites in the banking system are either Swiss banks or an Austrian Erste Bank, who have a much better business model and are a bit less exposed. The French bank's exposure to Greece is, in our opinion, fairly well priced in a very low market valuation, and so I think that's a better place to be than in Spain.
All right. Otto Waser, thanks very much for sharing your strategy with us. Chief Investment Officer at RNA Research and Asset Management, coming to us from Zurich.